Um, Hello to everyone who is on board at the moment. And I'm very pleased to welcome you on board of this webinar on the latest investment trends in PropTech. We have a very impressive team of managing partners and investors on board, thanks to Idris Gussens, who attracted such a great number of panelists today. Just a few words before giving the floor to Idris, who will moderate this panel. Just to say a few words about us as co-organizers. PropTech Bulgaria is the National Association of Bulgaria. We are dealing with everything that concerns PropTech in our country. But since 2020, we are also positioning the whole Central and Southeast European region on the map of European PropTech. So this is why we are very proud to be a co-organizer with Relevation of this webinar. And particularly big thanks to Idris for taking the initiative to make this webinar, particularly for PropTechs in our region. Idris is the co-founder of European PropTech Association PropTech House. He's also the executive director of Relevation and also founder of the PropTech Club, many hats. And the wonderful to know him personally. I give the floor to him and wish you a very nice time on board of the webinar. You can ask any questions you're interested in about the topic, and afterwards, following the panel, we will discuss them. So, Idris, the floor is yours.
Thank you very much for this straightforward intro. And on my side, indeed, many ads. And so this is why sometimes I have to take unscheduled holidays, which is exactly where I am today. So I'm in holiday, as you can tell. But it's a pleasure for me to interrupt my holiday to be able to welcome Valentina from Reach and Second Century Ventures, Jean-Paul for Camber Creek, and of course, Conan from Sustainable Future Ventures. So we decided to co-host with PropTech Bulgaria this session to basically deep dive into the hottest investments trends in the PropTech space. So today we will discuss the hot investment themes. And I have a lot of different questions for our panelists. The purpose is to grill them, to make them sweat while they're on the grill. But before we get started, just a few words about Relevation, if you allow me. We started this adventure 3 years ago. And so Relevation, referring to real estate elevation, so it's not a mistake, the name, it's not dyslexia, is a digital event, so a transactional event matching PropTech founders with VCs. This year, what is new is that we focus on everything related to climate. So we have a strong focus on climate. We have also a strong focus on regulators. So we have a couple of mayors who confirmed coming and speak, because we think that we cannot solve the equation of fight against climate change without the regulators. So we're glad to have a couple of mayors, and as well focus on exits. So we have invited different exit partners, acquirers, who have recently acquired PropTech solutions, so they can also share their perspective on their side of the table. So Relevation will take place on 29th and 30th of June. So if you're currently raising capital, for yourself as founder or even as a GP, as a fund, there is one event you cannot miss, which is Relevation. And if you're looking for great deal flow or co-investors or exit opportunities as well, mark these 2 days on your agenda and go to relevation.org. So that was the only commercial part. Now I'm done. So maybe as first question to kick off this great webinar, can I ask you to present yourself very quickly, maybe 1 minute, starting off with you, Valentina?
Absolutely. Thanks, Idris. And thanks to Relevation and PropTech Bulgaria for putting this webinars together. It's interesting, Idris, to know the history of the term, of the name Relevation. I had no clue. So my name is Valentina. I am the managing partner of Reach UK. Reach UK is a scale-up program fully backed by the Second Century Ventures. And I was always often asked what Second Century Ventures means. And in fact, their PropTech fund was set up by the National Association of Realtors when it was turning second century of operations. So there is also quite a history. So Second Century Ventures is one of the most active PropTech funds operating out of the US. And we have scale-up programs and operations in Australia, Canada, UK, and the US. And me personally, I come from the real estate background. Before I started doing what I'm doing back in 2019, I was in real estate for nearly 15 years. It was real estate development, private equity, investment banking, so a number of roles. But you're a real estate lifer.
Thank you. Jean-Paul, why don't you jump in?
Absolutely. Thank you, Idris, and thank you, PropTech Bulgaria. Hi, everybody. I'm Jean-Paul. I'm with Camber Creek. We're a Series A and B PropTech venture capital fund. We focus on being highly value add to the founders we work with. We lean into a very large network of strategic limited partners to help our companies scale very, very quickly. And I lead our European opportunities. So currently sitting in Switzerland as we speak. We similarly just closed our fourth fund. It's a $325 million fund. And then as I'm thinking about that, so I mentioned I lead our European opportunities. We're thinking about expanding our reach beyond the US actively. So it's good to be here and have boots on the ground. I'm excited to connect with folks after this as well.
Great. Thank you. Conan, who are you?
Good afternoon, everyone. Thank you for having me. It's great to be here. My name is Conan Lauterbach. I'm the founding partner at Sustainable Future Ventures. Sustainable Future Ventures is a new venture capital fund launched as part of the Patrizia business. We are focused on late seed to Series B companies which operate in the built environment. So let's broadly call that PropTech. We have a particular focus on solutions that drive sustainability and improve sustainability, whether environmental or social. And we invest with a focus in Europe, but also internationally beyond. Ultimately, we want to be a value-add co-investor where we can bring some of our strategic insights to bear, but with a fund that has financial venture capital focus. Interesting to note, I guess, this is now, I think, 9 years in PropTech for me, as I started my journey as an operator back in 2013. So more of that to come.
Which is actually related to the first question I have for you. So if we agree that PropTech is a momentum which has a beginning and an end, I would like to have the perspective of everyone here or of where we are today, especially in Europe. So sort of a temperature check. What's the status of the digital transformation of construction and real estate today in Europe? Conan, do you want to take the lead?
Yeah, okay, I'll lead off. And I guess as I entered the real estate technology market, when I think before even PropTech was a term in 2013, I've seen a fair bit of development in the market. But despite being in it for 9 years, if you ask me where we are in terms of adoption, the answer is very early in the day. You broadly need to look, I think, in the market in two parts at a minimum, which is the sort of institutional commercial side of real estate, and then let's call it the residential consumer side. And if we think about the development of PropTech in the last 20 years, you see that in the first 10 years of the century, we saw the emergence of listing platforms. And so effectively consumer-facing solutions that were the first real leap forward in terms of the application of technologies, the markets. And then after them, we probably saw the institutional or commercial markets begin to catch up in the second decade, where the focus began to be around tools that institutional investors and users could use to improve their real estate operations. And then at the same time as we've seen the emergence of those, we've seen a continuation of the development of consumer-facing solutions. But the reality is there's still a huge distance to go. If I think about the institutional space, which is where I started out, selling solutions to institutional investors, my view is we see two types of early adopters of technology in the space. Those were the largest institutional managers who manage multiple asset classes. And so we're able to look at the solutions and application of technology in fixed income and equity and other products, and then looked at the burgeoning alternative space, particularly real estate, and like, we don't have the same insight, analytics, or reporting in this space that we have for other asset classes. So we need to focus on it. And some of those have led in terms of the development and application of technologies. And then we had new entrants to the market. So new funds, new investors, new asset managers who really tried to differentiate themselves by being technologically forward. But in between those two extremes, we have the majority of the market who still today struggle with some of the most basic uses and management of things like data. So institutional investors will still struggle to understand what their exposure is to a certain tenant or a certain category of tenant at a portfolio level, which is the challenge that actually my first business, Voyanto, addressed, which was really, data aggregation, but still remains a problem for the vast majority of market participants. But what's interesting in the way the market developed and what makes me optimistic that we're about to see an acceleration of the adoption of technology is that we now not only have much greater data sets that owners and investors want to manage, whether it be related to IoT and smart buildings or whether it's related to the environmental or ESG performance of their assets, but the drivers and the need for that data is much greater. The original financial and tenant level data that we saw was needed, but wasn't essential in a market where everyone was making lots of money. But as you see increased regulatory pressures to report on the sustainability of your buildings, that those regulatory requirements will be unavoidable and they will drive general technology adoption within the institutional market. So huge amount to come. And then similarly, I think if we look at the consumer residential markets, we have seen some progress. We've seen tools improving the way we rent, the way we buy. We have seen tools focused on democratizing access to the asset class, whether that's through fractionalized ownership or through alternative solutions to enable people to own their own homes. But again, the adoption of those has still been fairly limited. And I think one word on the US versus European markets, undoubtedly, as with technology in general, the US leads, and I'm sure Jean-Paul and Valentina can add to this, but both because there's been greater capital invested there, but also because it's a more homogeneous market.
Exactly.
So the European market has the traditional challenges of scaling businesses, and that's particularly so when it's related to real estate, where each jurisdiction has specific requirements and specific ways of doing things, which would mean that it's been slower to come, and that you will see some solutions which are able to scale throughout Europe, and others where we see multiple national level players really owning each market.
Yeah, just to jump in here, Idris, if I may, completely agree with Conan. It's still early days, and however, what's interesting, since I'm working in real estate for a number of years now, I was traveling to MIPIM last week. So there are some good news here. MIPIM now has a PropTech section, and that is a sizable one that is now combined with the main MIPIM. However, what I would have to say, there are still two different crowds. So we have real estate bubble living separate life to the tech bubble. So that's something that's still the bridge that needs to be built in between the two. And if you speak to the tech people, they would be all optimistic, saying that real estate train adoption of technology has left the station. Now we've had COVID, a huge push for an acceleration in the adoption trends. And if you speak to real estate people, they will tell you, well, we are completely confused about those solutions, which solutions to use, how to navigate ourselves. And Europe is extremely different to the US in that sense, in the sense of the stage of the market. I'll just throw some stats out there. There are about 3,000 PropTech companies in Europe including the UK, and 80% of those were set up less than 5 years ago, and 71% of those are at seed stage. So, and if you talk about real estate institutional clients, they don't want seed stage companies. They want technologies that exist, that have been tried and tested, and that where the companies of the size that can be onboarded into those real estate portfolios. So that's where, in fact, you need some bridge, and I believe venture capital has the role to play here. And I'm so pleased that, Jean-Paul, your company is coming over. I'm pleased, Conan, that you set up their vehicle. And there are a number of other vehicles that are now entering the space in the UK, and I'm hopeful that will actually help PropTechs to grow to the right and get to the right stage to become properly adoptable by the real estate.
Yeah, I largely agree with everything that's been said as well. Still definitely early days in my opinion. I guess just speaking for our team quickly, we still evaluate a lot of opportunities on a regular basis that focus purely on just digitizing kind of analog processes. And to me, that's a really interesting signal in this market that, it makes me even more excited for what's to come. My opinion is that kind of once you move away from that analog process into a more of a digitized format, you're opening up an entirely new frontier of innovation, and it's exciting to be kind of right at the beginning of what that transition is going to look like.
Couldn't agree more with everything that was said. When COVID-19 started, we had the impression or the feeling that this would be a tremendous boost of innovation adoption, and so we created, we forecast basically that 2021 would be the year of the bifurcation in real estate, where you would have the laggers and then the innovators that would really go in two different directions, and it would be super hard for the laggers to cope with or not to be disconnected from the market at some point, in fact. But what we have seen 2 years after, I think it's definitely was a great accelerator of technology adoption, but often it was not always related to PropTech directly. Sometimes it was just, we have to jump into video conference, or we have to have digital signature tools, or which is great, but there is still plenty of other stuff to do, which are even more essential probably. So I guess there is still this mentality of if it's not broken, don't fix it at some point. But thanks, regulations are coming. Good. Conan, you already spoke a bit about it, but I would like to have the views of everyone on the table here about the different, I would say, trends in the different real estate asset classes, because PropTech is so huge, so heterogeneous, if it includes the complete built environment, including all the real estate asset classes. You cannot compare office and logistics, healthcare, residential, etc., etc. So if we start with the two main real estate asset classes, which are residential first and then office, what are the trends there according to you, starting with Valentina?
Thanks for this question, Idris. I really like it personally because, quite frankly, you're absolutely right. There are different verticals in real estate, but residential and offices are the ones who are getting closer and closer, just based on the use case. Because now, after pandemic, we all have learned how to work remotely. We all have learned how to save time on commute, and then realize that there are some benefits coming out of this. And effectively, our offices become an extension of our private space, and our private space becomes an extension of our office life. As you can see here today with our backgrounds, I think I'm the only one who is working from the office today, by the way, just as a proof to this. And yeah, so what is then happening there and how technology can help? We, in both offices and residential, we are, as real estate industry becomes more and more driven by what the occupier wants, because we are looking to solve for occupancy, we are looking to solve for bringing tenants back to their office buildings, and then ultimately we want to engage with tenants. So the days of signing 10-year lease contracts with large corporates, and that's been a norm, are gone. Unfortunately for the real estate for the real estate asset managers, fortunately for us innovators. And as such, there are a lot of innovative solutions coming into play as to how to design space so that it is occupiable, literally like across the 24 hours, 7 days a week. I was a big fan of WeWork back in the day. I think that they had a great idea. They just didn't build the right model around it. So I think that we will be looking for those for more innovative occupier or operators of real estate space. Whether those operators have to be real estate owners or not, that's a question mark. But regardless, to make those decisions as to how their office and residential space of the future has to be designed, we do need a lot of data. And as such, there are a lot of technology companies that are coming into play that provide sensors, that provide useful dashboards to understand what tenants want. And tenant engagement, not in the form of surveys, because once I spoke to one of the real estate companies asking them, how do you engage with your tenants? And they told me, well, we just send out some surveys. And I was like, well, that's a very basic engagement tool. There are better tools available on just to understand the preferences of the tenants, the preferences of the occupiers, what drives the people coming back, what increases their satisfaction. There are a lot of technology companies and innovative solutions that help exactly that. For example, receiving parcels, recycling stuff from the office, and that just brings people back, willing to come back because it's just more convenient. And then the question a lot of developers are asking themselves nowadays is how they need to repurpose their residential or office space, and or how they need to design new developments so that their space keeps is continuously used for the duration of the life of the asset. And those are very fresh questions for which there is not an update yet. And there are a lot of, again, technology and innovations coming into play where looking to solve for the right data and data analytics, and that informs those new developments that effectively become mixed use office and residential development assets.
Great.
Yeah, and to provide a supporting point to what Valentina said, I think we're facing a very interesting conundrum right now. It's, kind of what is the future role of the office, and if it's going to return in a form that at all resembles something pre-pandemic, how do we safely get people back in their seats? And I think Valentina alluded to it. I think the answer to that is data. I think it presents a great opportunity for technologies that are tackling things around, things like access control. How do we track who's coming in and out of the building? For founders tackling occupancy analytics, even, how do we understand who's moving through the space, how spaces are occupied during what times of the day? And if you take that, a step function further, when you have that data and you're able to harness that data, that unlocks something even more interesting to me. And that is, once you've unlocked that pool, how do you optimize for each asset's carbon footprint? How do you understand, the footprint that each of these buildings themselves is creating? So for me, on the office side of the equation, that becomes a particularly interesting discussion. And then for residential, I think what we focused on a lot recently is kind of the digitization of the home buying process as well. I think we're starting to see a lot of verticalized software and services popping up across various pieces of the home buying process, kind of making a process that's largely been pen and paper more and more digitally enabled. So for example, I'm sure many of the folks on this call have heard of companies like I think it's Clicali out of Spain, making the process of buying, a home very, very quick and easy within 7 days, they claim. Propertunity is doing another piece of that kind of that home buying equation, providing liquidity to homeowners who might want to reinvest in their assets. So that verticalized software approach to the home buying process, kind of the residential side of the market, is also something we're particularly excited about and continue to track.
Okay, great, thank you. And in fact, we have Jamie O'Darry, the CEO and founder of Industries, which is, of course, a unicorn, will join Relevation to discuss also this topic. So looking forward to have his views. And I would say also what you both said reminds me of the article of Brian Chesky, the CEO of Airbnb, who speaks about the great conversion. So he explains that before, the sphere where you worked, where you traveled, and where you lived were different. But now, because of COVID, to a certain segment of the population, it merged, and they saw basically on on Airbnb, 90% of all the bookings were done for more than 1 month in the same country. So these are people that are just renting a villa on the countryside or on the seaside or whatever, just to spend days there to work, travel, and live. So it's interesting because it can reshape the asset classes. Maybe there is no asset class anymore. There is only square meters that have different usage according to the need of the end user. So, but okay, going further, we discussed the two main asset classes. Now let's deep dive into more niches, I would say. For instance, retail, logistics, healthcare, which was also a lot under pressure during a pandemic. So maybe there is also a big room for improvement. Who wants to jump in? Jean-Paul, do you want to take the lead?
Yeah, I'm happy to. And I should have mentioned in my intro. So about 6 years ago, I attempted to stand up a corporate venture capital function for Macy's, a $25 billion department store in the United States. And this is a constant conversation about, what is the future of retail? And I really think kind of the pandemic has accelerated that conversation pretty meaningfully. But To maybe talk a little bit about the retail and logistics side of things first, and then jump into healthcare perhaps. I would really keep an eye out on technologies that are helping retailers, or really any real estate owner operator, kind of monetize underutilized space. There's a company out of Austria that I'm particularly excited about called Storebox. Comes to mind. They just raised a very large round, and they're effectively trying to identify pieces of the asset that have historically not been used, and turning those things into kind of micro fulfillment centers or storage spaces or what have you. Yeah. So that's a trend that gets us pretty excited. And then on the healthcare side of things, it's interesting, right? Because as we transition back into the office, I think employers and also just building owners are going to want to be a little bit more invested in kind of the healthcare journey of the folks that are actually residing in their buildings. And at least the way we're starting to see it on the US side of things, but maybe a little bit, it's a little bit early here in Europe, is the concept of amenifying the office space with healthcare amenities. So things like bringing primary care into what the future of office looks like, so that rather than an employee having to go down the street to go get a checkup, they can go 2 floors down and understand, what their vital signs look like, how healthy they are, just starting with kind of the primary care piece of that health journey. And that's something that I think we're going to continually see infused into what the future of office looks like. But again, it really kind of stems from, I think, building owners and employers as well are going to want to take more of a meaningful stake in helping their kind of their tenants along their healthcare journey as well.
Inspiring. All right, moving on. Another question I would like to hear your opinion on is maybe if you speak about let's jump into concrete investment themes, concrete topics that are very exciting for you. It can be technologies or use case. Like if I ask you, how would be your dream portfolio composed today? What teams do you really absolutely want in your portfolio? Starting off again with you, Jean-Paul?
Sure, happy to. Well, there are a handful of topics. I think right now I'm particularly getting excited about kind of technologies addressing kind of the upstream market within real estate, so construction and development technologies. I think all of us on the call are aware of that kind of the global construction market is under a pretty tight labor squeeze at the moment. And so we've seen a fair amount of technologies popping up that are helping address that squeeze, whether that's labor marketplaces or workforce optimization technologies. For me, particularly, technologies that address how to better allocate your workforce across developments and construction sites are particularly exciting, and honestly, in my opinion, desperately needed. I think we're, as rather than going out and having to find new labor, I think the question or the problem that can be more easily solved is how do you optimize the labor that you already have? And so any technology that's helping companies do that, I think, are in a position to potentially succeed. Additionally, kind of up that kind of part of the value chain, anything that's helping alleviate any pain points around takeoffs and material procurement, I find particularly exciting too. Again, not beyond just the labor constraints within that market. I think we're seeing a fair amount of material price increases. I think the stat was in 21, material prices jumped 20%. So what I'm particularly interested in is any technologies that help contractors identify what materials they'll need for a job right up front. Maybe provide them with things like cost estimation for those materials, even price level against other alternatives in the marketplace. I think that data is particularly valuable as material prices continue to grow. And then the bonus, the cherry on top, is if they can handle the logistics of actually getting material from producer to site itself. So that construction is a piece of what I'm focused on at the moment. And then Conan, more eloquently put it than I ever could at the start of this conversation, but companies that are leveraging data as a core piece of their product, I think, is something that we'll continue to see. So if companies are positioning themselves as leveraging an immense amount of data as part of their value proposition, for example, any companies that tap into, for example, flex office space data. I think flex office right now is a topic that is particularly exciting as we think about what the future of the workforce looks like. And in my understanding, I don't believe that there are any companies out there really harnessing data around, what types of spaces are being leased, how many people are in the space at any given time. It kind of resembles, I guess, the CoStar model that I'm sure many of the folks on this call are familiar with. But as we move into a post-pandemic environment, I almost think the flex office kind of asset is creating its own little sub-asset class within itself. So data around that piece of the market would be pretty fascinating to dig into for me as well.
Thanks. I'm Also curious about everything related to carbon footprint, of course. So all the technologies decreasing the CO2 emissions of HVAC solution, for instance, is certainly a topic that could be relevant. I mean, asking you, Valentina and Conan as well, and everything related to air quality monitoring with the return to the office, probably also. So, do you have any comments, Valentina and Conan?
Yeah,
Um,
go Valentina.
I was just about to say the sustainable future ventures, I'm sure, have a lot of views on this topic in particular. But if I may just to jump in first, I think that real estate drives what we find exciting as venture capitalists as well. So in 2021, for example, there was a big push for tenant engagement and hybrid working solutions, as was already mentioned. But then it also kicked off the trend of looking for solutions that help with cost optimization, read sustainability, that helps with savings on the energy consumption, on water consumption. And as such, we in 2022, we all moved looking more proactively for solutions that helps with sustainability and climate tech. And not the least, I think this year we also are looking actively and proactively for alternative energy solutions technologies because of the world we are living in right now, and Europe actively looking for diversifying its energy suppliers. Everyone is looking at tech as a potential source for help there. So that's, I think, that ultimately what then comes into our dream portfolio is what will help real estate industry and more generally business people to solve what hurts and what the pain points of today. So we're not just dreamers, we're also looking for some practical solutions. And Conan, over to you on sustainability. I don't want to steal your...
No, not at all, thanks. I guess I think about it sometimes to break this down through the stages of the value chain. So Jean-Paul already mentioned construction and the challenges there, and completely agreed. I think but to address a couple of different areas, the sustainability challenges around the operation of existing built real estate, and to your point, Idris, around HVAC, like if we think about what are the unavoidable megatrends out there, then sustainability and reduction of carbon emissions are probably the biggest that impact the built environment, given that it contributes 40% of CO2 emissions. And so then if we step back from there and think about, okay, well, what are the biggest challenges? What are the biggest contributors of that CO2 makeup? And then we know in the construction stage, it's concrete, and that may or may not be particularly easy for technology venture capitalists to improve on. But that then leaves the heating and cooling of buildings, and how we both improve the efficiency of that and start on the path to electrification of it to the extent it's not. And so absolutely, like that's a core area which we've been focused on is, how do we improve the efficiency of HVAC? How do we move to electrification? And that's in, maybe HVAC in the commercial sense, but let's also not forget that in residential buildings, it could be a heating system or it could be a cooling system. So innovation within things like the heat pump technologies, whether for heating or cooling, are very interesting. Innovation in terms of improving the efficiency of those operational HVAC systems, very interesting to us. And again, some of the biggest challenges that the owners and operators of real estate have, and challenges which they're forced to address. And then connected with that, it's around the systems that help the measurement and reporting on the performance of these assets, because ultimately you can't manage what you can't measure. And so we're going to focus on those solutions that support both the regulatory requirements to report on ESG matters, but also on the desire of operators to establish their assets as being greener assets, because that's going to drive cost of capital reductions. It's going to drive access to the highest quality tenants, which, as we see that the disruption in traditional office and other asset class markets, will be increasingly important. So I think that's in the operation stage. And then in the transactional piece, I think the solutions that encourage home ownership, Jean-Paul mentioned opportunity and others. I still think there is an opportunity in European markets for really a breakout company in the way that we've seen perhaps Divvy Homes do it in the US. We've seen a number of participants there, but no one that's really really pushed it out yet. And that may be something to do with, I think, challenges around the value prop for the consumer as opposed to the provision of capital. And so that's, again, from a sustainability standpoint, is plays to the social sustainability elements. And then I guess just to go back to the construction space, I think it's not just around labour management. There are things like reducing the risk in construction, improving scheduling and planning. I think that's particularly important as that's normally the primary risk that's associated with large-scale construction. And then similarly trying to meet the increasing regulatory and health and safety requirements. So you're not only do you have the squeeze on workers, but you have this increasing regulation burden. And so I think, solutions which have large crossover with what Jean-Paul mentioned would help you both manage your workforce, but also manage your compliance and your workforce's compliance with regulation are very interesting.
QHSE, environment, and okay, clear. I do agree. Now we understand what excites you, but you have access, certainly, you all certainly have a great deal flow of a lot of opportunities of investment, a lot of startups contacting you. So I would like also to ask you the opposite question. What is not exciting to you? What team are you less excited about? So if, for instance, in one day you get 20 decks and you can analyze only 5 of them, what are the ones that you would tend to put directly on the recycle, on the bin, to say so? So what is less exciting for you? If you cannot read everything, you have to be cherry picking. Starting with you, Valentina?
Sure, thanks, Idris. I don't think that there is anything that wouldn't excite me. Just certain themes I would be a little bit more cautious and thoughtful about, especially in Europe, than others, and maybe not invest today, but just take a wait and see approach. And that for Europe, that will be in the AVM space. So that's where Europe is tiny bit different than the US. So in the US, you've got large real estate, a homogeneous stock that makes it possible to build automated valuation models that give you error margins less than 5%. And based on that, you can build a lot of use cases. In Europe, I would say this is not yet cracked, so it's more difficult. For example, just recently we've seen a Future of Real Estate publishing their report on AVMs, and they say that for the UK to be able to predict where their value of real estate will go, you will need to have at least you will have to build thousands of models for different areas, because for different locations you will have different factors driving the value of the asset. So, and then even with that, their error margin is anywhere between 5 to 10%. So it's harder to build use cases on such an error margin practical space. So theoretically, I think it's extremely interesting, but when it becomes to practicalities or you informing your investment decisions based on these models, I think it's still challenging for the time being. And then in the US, I think that AVMs are much more progressed, and as such, and then Jean-Paul, I'm sure that he will have maybe better informed opinion on this, but I see AVMs also less exciting because they then become a commodity. Then as soon as you have perfect data, then you can just build same good models based on that, and then it boils down to the use case that you can build on top of this. And then the second one, where I will be extremely cautious and where I always discourage entrepreneurs to build this way, are the solutions that mix real estate and technology risks. So there are a number of software solutions that real estate technology entrepreneurs that they feel tempted to then start building their own real estate portfolio, deploying those software solutions. And as such, it may be a wonderful idea and it may work, but those are two different risks. Then you will be fundraising for software and real estate exactly from different types of investors, and you at least need to maybe think how you separate those solutions into two different companies and legal entities so that in the future it doesn't create a problem. But then also do not forget that if you're a software company and if you're a tech entrepreneur, you don't always understand real estate as well as you understand tech. So be careful about it, because it's a different asset class with its own risks, and asset and liability mismatch is quite possible. So you better than have a founder from real estate. That's where I'm probably heading. So that's another one where real estate investment or operational risk is taken, where I'm extremely cautious as well. I'm just also trying to make sure that in that case I have software business clearly ring-fenced, and then we can deal with it separately.
Thank you. Conan, adding to this?
Yeah, I mean, maybe I'll call out a couple of other areas, and with an eye to the fact that there are many entrepreneurs listening to this. It's not to say that these are not interesting business areas. It's just that they can be very challenging for a venture investor to invest in, because ultimately we're trying to make bets in companies that we think are going to build very big businesses. And so if that is in a space where there are an awful lot of competitors of a similar size, none of whom have gained significant traction, that's going to be a space that's hard for us to get conviction over backing a company as to be a breakout company. And so, one area that comes to mind, and obviously related to our area of focus, is things like BMS optimization. Like, the reality is we've seen an awful lot of solutions in the space, some with interesting technology, but nothing that's either 10x better, or that from a product standpoint, or that has really shown very significant levels of traction. And so for us, that's an area where we're leaning back in the sense that we would like to make a play there, because we think it's a very large addressable market. But the reality is right now, that's only going to happen when we're able to see one or two companies really beginning to get significant traction, demonstrating scalable sales and marketing functions, because otherwise it's too hard to pick a winner. And I think, similarly, if we look in some of the office tenant experience app space, I mean, we've seen some recent consolidation there with the acquisition of Office App and the acquisition of Lane by VTS. And so similarly, we now have some quite large players, but equally it's an area where we see a number of emerging players. And then the question has to be, what is it that you're bringing differently that's going to enable you to be either breakout in a crowded market, and to compete with the established players? And so then that brings us back to a general point that entrepreneurs need to consider, which I almost always raise, which is considering for the business you want to launch, what is the right type of capital for you? Because it's not always venture capital. Sure. You may be able to build an interesting business, which isn't going to be a huge business, but can be a very meaningful business for you as an entrepreneur, without going to venture capitalists who are going to be seeking, 10x plus returns on their investment. So that if you come to them with, having looked at what else is going on in the market, having seen where valuations can be for large consumer-facing businesses or highly scalable SaaS solutions, and then you come to market with those expectations with a product which is relatively niche, you're going to end up disappointed. You're either going to end up disappointed in the fundraising stage, or potentially worse, you'll be successful in the fundraising stage, and then everyone will end up disappointed after the event, because you won't be able to achieve the type of growth that the investors that have backed you are seeking. And then that leads for an unpleasant ride, both for your investors and for you as an entrepreneur.
Yeah, and I can only echo to this, because, for instance, the founder of Forge, who sold to Yardi, so they're going to speak at Relevation again about their exit experience, and they never raised any capital. So they were based on own funds. They were customer funded. And so it's even more exciting, of course, if you are able to sell your company and you have 100% ownership of the shares. But probably also having a great VC on board is a great leverage to accelerate the growth. So I can also, it's also something that has a lot of value besides the capital. It's to have a great experience on board. But Jean-Paul, where don't you want to invest?
Well, I would kind of phrase it similarly to how Valentina phrased it. We would be excited about making an investment in the space, but sometimes the challenge is not that we're excited. It's picking a winner can often be the challenge in a market where there are a lot of competitors. To Conan's point. So to be clear, I think one that we see frequently is electric vehicle charging, a market that I see is particularly mature in Europe, but maybe a little bit less so in the United States. And as it continues to mature, we do want to make an investment, but the challenge we run into regularly is kind of the large hardware component of that business model, and kind of what advantage the startup might have in getting their chargers or their hardware to the market itself at a rapid rate. So In our mind, that hardware too is going to continue to evolve. There might be some questions around, the lifetime of the chargers themselves and how you continually iterate on the hardware as they go to market. But what we started to see is some startups approaching EVs with more of like an open architecture business model, rather than actually providing the hardware. They're providing the operating protocol that can sit on any type of, electric vehicle charging hardware. So for us, it's a space where we're constantly tracking, one that we would like to make an investment in, but we have yet to do so today.
Yeah. Okay, cool. Well, during my holidays yesterday, I was watching Bloomberg just before sleeping to be super stressed and to think a lot about work. But so basically, Ron Baron, the founder of Baron Capital Group, he was answering to a question of the moderator, saying what makes a great investor, and his answer was pretty straightforward. It was, you need to understand the world. You need to understand the trends, to understand the challenges. And so my question would be to the three of you: how do you set the trends? I mean, how do you understand the trends? How do you spot the trends? Do you collaborate with your LP base? Do you conduct brainstorm with founders? Do you go to events? Do you read? How do you do to make sure that you understand this is a long-term trend that will really have a huge potential, or this is just a short-term trend that will not have a big impact? I'm less interested about it. How do you do this? Starting off with you, Conan.
So I guess there are a number of ways we can do it, and one is, as you mentioned, you can speak to your investors if you have a strategic LP base, and that's certainly something that we do with Patrizia and with others as we bring them into the fund. But it's certainly not the end of the discussion. I think they give you data points, because the reality is the value of those engagements very much depends on the people you speak to. And sometimes if they are operationally heads down, it's very hard for them to sort of look down the road and see what's actually coming along, so that you can almost end up being very responsive to their input. But they can, when you speak to enough, at least give you high-level insight about common pain points. And I think that's almost more interesting. It's when you see that commonality across the feedback you get, as opposed to any one data point, which ultimately is a very similar challenge that you have as an entrepreneur as you try and build out a product, to make sure that your product roadmap is driven by a common pain point, as opposed to a pain point felt by a particular customer type. And then in addition to that, I think one area where it can be quite easy to develop your trends is to look at other verticals. So, I've always been very focused in our team to bring in investors that have been generalist investors and invested in other sectors, because, we constantly say, oh, real estate and real assets, like it's one of the least digitized industries, and it's true. And so what that means is, in a lot of spaces, you can look to other verticals and see what has worked there, what has been the progression of adoption of technology, and then use that to help focus your theme identification within the real estate vertical. And then, of course, there is the area of, I guess, thematic focus, like identifying big trends, like we talked about. Like, what are the biggest challenges out there? CO2, carbon in the built environment. Like, it's such an easy one. But then when you drill down that to see what the real constituent parts are, that is then another area. You don't need to be a visionary to understand that is going to have huge impact. You just have to try and get a gauge on what the timeline is. Because ultimately, sometimes the challenge is not investing in the right space, but investing in the right space at the right time. Because ultimately, as venture investors, if we get it out by 5 to 10 years, then that can be very challenging for us, even if we're actually in the right space.
Clear. Jean-Paul, any comments?
Yeah, no, Conan mentioned two great points there that I wanted to support as well. The first is definitely using LPs or working with LPs as data points for kind of how we think about investing. And we take a very thematic approach to how we invest as well. And what we find to be particularly successful is when we're partnered with an LP and they come to us and they say, hey, what is happening in X market? For us, that's a nice signal to potentially begin a kind of a thematic approach to mapping that market, understanding the players in the space, who's doing what, maybe any nuances between business models, so that as we continue to track it, we have a really solid understanding of each of the competitors in the landscape and how we might be value add to a company that continues to grow. So for us, we really do look at our LPs to help us identify which trends will be long-term. We're meeting with them for at least on a monthly cadence, and then often responding to emails on a one-off basis just around certain areas of interest. And when we think kind of what we think a successful LP relationship looks like is what kind of when they're having a trouble with a piece of their business, they come to us and ask us for our opinion, and we're able to provide some of that guidance. And that ultimately is an invaluable piece of feedback, because that helps us kick off what could be a thematic approach to making potentially a new investment.
Yeah, their pain points.
And from my perspective, I think that indeed Con and Paul identified the key sources of what makes us to decide which themes to back. Just one empirical evidence to underscore the fact that the source of adjacent verticals being an important source is the fact that there are a lot of real estate technology entrepreneurs that come not from real estate background, but from backgrounds in other verticals in fintech, for example, that come to real estate and they're looking to deploy or to develop similar solutions just for real estate industry. That's just impressive. And I can see that real estate has been indeed probably more digitalized, not from within, but from the outside. And then another source of like trends, where to look for trends, are the occupiers themselves. So the corporate occupiers who are not necessarily the owners of large real estate portfolios, just because it's now more and more such a much more tenant-centric approach to real estate development and asset management. We look at those to understand what they actually need from real estate and how they want to use real estate space.
You know, there is one thing that is like really pissing me off, or that I don't really, I never succeed in understanding, is when we say it's like this because it's market standards. And so I like when we have founders from other industries that come and that identify an inefficient process and that ask themselves, but why is it this way? And then we answer because it's market standard. Okay, but there is nothing forcing us to keep with the same inefficient process or tool or reporting or whatever. So so indeed, I think it's great. And if we look a bit now in like we looked behind our shoulders so far. So now if we look a bit in front of us, I see two main trends that I would like to ask you about for the future of PropTech in a way. Is maybe an overlap between PropTech and urban tech, including mobility tech, energy tech, climate tech, etc. So it became a natural sort of evolution to some extent. And the second trend is, of course, everything related to climate tech. We have almost all the PropTech funds branding themselves as climate tech funds. Are launching a new climate tech vertical as part of their different PropTech funds, etc., because of this huge emergency and this 8-year race to decrease the CO2 emissions. So it all makes sense. But I would like to understand your views here. Basically, is PropTech an obsolete term? Are we in the end of the term PropTech? And are we now into a new evolution where urban tech has become the new PropTech? Because, you know, at some point, just to end up my question, we could say that PropTech became a synonym of real estate because we cannot build without PropTech. So it's really an essential component, like a floor, like a wall, like a door. And we spend 85% of our time inside. So we are really overwhelmed by PropTech. But maybe the term PropTech now is just an obsolete one. What do you think of this provocative question? Maybe Conan.
I mean, it's funny because I don't really like the term PropTech, but it's really useful because sometimes you just want to describe the area quickly, and it's a sufficiently well-known term that it gives people an indication of the sort of thing you might invest in. I think where it's tricky is because, as you said, there has been this broadening of what most, and I'll use the term built environment tech investors invest in, and that's partly driven by the fact that PropTech as a term emerged really when institutional real estate became focused on the application of technology. And so many of its early applications related to those types of solutions that institutional investors in real estate were interested in. And much of the capital that was invested came from those institutional real estate investors. And that has meant it has this very natural focus on real estate, where in reality, when I think about how I like to think of the concept, because it's convenient to describe it, it encompasses construction tech, it encompasses elements of fintech in terms of like these home ownership solutions, equity release, and so forth. It includes elements of insure tech, and then it should ultimately include elements of climate tech because of the impact the built environment has. And for me, then, if that's how you see it, that's great, because it remains this generic term. But I think the problem with it is it means different things to different people. So, I'll sometimes, I use it because it gets people to the starting line, and then normally I have to develop it from there. So I don't think it's redundant. I think it can just mean different things to different people, and you need to be aware of that when you use it.
Absolutely, and if I might expand on this, it's legal tech as well. So one of our early investments, and we started doing PropTech investments back in 2008, well before in PropTech world even existed. One of our early investments was DocuSign. Is it PropTech? Not at all, but is it an impactful tech in real estate? Very much so. So that's why for all of my career that I'm real estate tech, I define PropTech as something that makes real estate more transactable, investable, transparent, occupiable, operationally more efficient. So anything that touches real estate and makes an impact on how we operate, occupy, transact is PropTech in my world.
And just to jump in there, I mean, it's a great example from a venture standpoint. Those types of solutions are in some ways almost the most attractive, because they have very broad applicability, which means that the market opportunity of them is very large, which means that your ability to build a big business is much greater, and or the chances of building a big business. And so therefore that makes us more comfortable as a venture investor, particularly in a market where you have very high prices. Ultimately the in price you pay, you have to justify by your returns analysis. And that's much easier if you can see a route to building a very large business.
But then, I mean, this is typically SaaS B2B business. We're far away from the concrete reducing CO2 emissions.
Oh, but I mean, it's a breadth of a sector. I mean, I think LPs will ask, so like, what's your focus within the built environment? And we'll say, well, hold on, we're already sector focused. Venture as an asset class was started by generalist investors who invested across everything. We bring additional insight and a nexus to the built environment, which is as focused as you can be when you are an investor that needs to ensure they're investing in high quality deal flow with good financial returns potential attached to them. So yes, you're right. It is a broad area, but if you're going to invest as a financial investor, you need to keep a certain breadth.
Yeah, sure. Jean-Paul, any comments?
Yeah, no, I mean, I largely agree with what's been said, and Valentina's point about DocuSign resonates. We're investors in a company called Notarize, which is a digital notarization platform that sells into and significantly impacts the real estate industry. So from a financial perspective, that's definitely it's a nice to have. But Idris, to your point, like I think the real estate sector just generally has some really significant staying power, and that's probably a very obvious statement. I saw a statistic recently from Autodesk that said something along the lines of more than 1,300 buildings are being constructed on a daily basis within Europe. And so like there's continued investment in the space, and the fact that there is continued investment in the space gets us excited, because that, those 1,300 buildings on a daily basis provide a new frontier for implementing some of this cutting edge tech that could help, alleviate some pain points around CO2 emissions or otherwise. So both ends of the spectrum we're particularly excited about.
Thank you. Well, we're right on time. I think I almost asked you all the burning questions I wanted. I maybe have a few more, but I'll keep them for end of June.